Alexander Muthoot, the MD of Muthoot Finance, who's joining us right now on this show. Sir, to start off with, IFL Finance was one of your competitors, which was off the market for the last 6 odd months, and definitely that must have helped you gain some market share and some more demand coming in because of IFL Finance absence. But given the fact that now they are coming back into the market, how are you seeing or how are you expecting the competitive environment to be in the market now going forward?
Thank you. And a player coming back or coming to the gold loan front doesn't actually alter our business model. We have always, Muthoot has always been a focused gold loan player, and we are focused on our business, definitely. And we see great demand also today. A player who has stopped business coming back, yeah, let them also come. The market is very wide, the market is very large. There is sufficient space for this and many others also to come. So I think that doesn't alter our business model or our business prospects. That's for sure.
This is very difficult to quantify, but because of IFL Finance absence in the last 6 months, had you seen a much more demand coming in compared to what you were expecting? Any way you can quantify this?
Actually, our growth was quite good in the last quarter of last year. That means fourth quarter of last year was a very good growth actually. All this IFL were always there at that time. So we had very good growth at that time. See, the growth actually comes from the demand in the market. See, what is happening, what we are seeing is the sense we get from all our branches. We have about 5,000 plus branches all over the country. Is that at the ground level, there is good demand for gold loan. One of the primary reasons we attribute, or our people attribute, is that the availability of unsecured loans, personal loans, such etc., are becoming a little difficult for the customers. So more and more people are relying on the traditional gold loan. That is one of the reasons we see good business growth there. And the second is also the price of gold. The gold price has also gone up substantially. See, in the last 2 years, the dollar price has gone up from 1,650 to 2,600 today. Today it is little more than 2,600 is the international price. So maybe a rise of about 60% is what we see in the 2 years. So people see their gold value, their gold holdings also rise up substantially, and they feel that they can maybe monetize the value of the gold ornaments by taking a loan, which is quite simple also.
You've already, kind of answered a couple of questions that I had on the gold prices as well as the overall demand in the system, especially with respect to that unsecured loan bit. But I just wanted to get back to the competition because the street is trying to decipher as to how it's actually panning out for the players, because your own market share at one point of time was very close to 45-50%. It came down to less than 40% a couple of years ago. Could you talk to me about what is the market share right now, or at least what is your target you have in mind for, let's say, next 12 months out? What could be the market share that you would want to take up?
So I think we are more than the market share, because this market is so huge. It's so huge. There are a lot of players there. There are unorganized players, there are organized players, there are banks there. So we actually would not like to look at the market share, because we don't want to feel that we have the largest market share, etc. We would like to see our own growth. So our own growth has been quite good in the last so many years. We had given a guidance of 15%. But we were able to grow more than that most of the years. And this year also, we had given a guidance of 15%. And I think we should do better than that this year also. We haven't revised the guidance as yet. Probably we will take a look at the revising the guidance maybe after the end of the quarter, after the end of this quarter, maybe while announcing the results of this quarter, the board may look at the revising the guidance. But so let us not talk about the market share, whether we have 10%, 5%, 50%, etc. Because quite a lot of people here are the unorganized players also. Let us look at how we are growing. Are we growing sufficiently? Are we getting the required growth? Yes, we are.
No, that's a fair point that you're making, and in fact, to the point of your 15% growth as well, if I have it right, in Q1 you grew by almost 23% when it comes to the gold loan AUM. The total AUM growth was around 28%, so looks like you're poised for a big beat versus the initial guidance that you had given. I wanted to shift focus and talk about the company's subsidiary, Belstar Microfinance Limited as well. We understand that it has received final observations from SEBI for its IPO. Could you talk to us about the timeline with respect to when you expect the IPO of this to really fructify and hit the street? How much amount would you be raising? How's been the initial response from the investors?
So we haven't actually started going to investors, etc. for that. We have, I think, from what my knowledge is there, I think we have a 12-month period. So we will wait for an opportune time to hit the market there. But having said that, it is not that we are, because it's a subsidiary of Muthoot also, if there is any requirement, Muthoot can always help them even if the IPO doesn't come through. But I think for the present, for the next 1 year, we are quite capitalized for that.
So are you saying that because you're not in a hurry, there are chances that you might look at an IPO at a later date? Or what's your base case assumption? Is it likely to happen in the next 12 months or not?
Yeah, I think there is nothing which prevents us from doing it. I think it should happen. Definitely it should happen.
NPA numbers had inched up a bit in the first quarter, and you had mentioned that was because of lower auctions that you had done. How are those numbers looking right currently? Have they come off a bit?
See, what is happening now is that the gold price is so high. It is actually very painful to auction some gold and maybe refund money to the customer. It's very, very painful. So if you auction some gold now because the price is so high, the realization is much more than what we actually is due from us. So I think with the high gold price, we should not be doing much of auctions, if that is what you are talking about. Why should we destroy a customer's very precious ornaments? See, these are ornaments which is precious to him, and he would like to keep it for more time. Yeah. So auctions, we would like to do as little auctions as possible, till unless we are forced to do it, or we are forced that we need to do the auctions.
Okay, point taken. And what about the NIMs? Because in the last quarter, there was a bit of a slip as far as NIMs are concerned at 11.5%. Given the various moving parts, rate cut cycle beginning and all of that, what's the expectation how the NIMs are likely to trend in FY25, sir?
So I think the NIMs would be the same. We'll be able to continue with the NIMs because to my sense, what sense again I'm getting from the banks, etc., who are lending to us, their lending rates had actually gone up by about 100 basis points the last 1 year plus. But now it is peaked up. I don't think it is going to go up again. So it will only slowly stabilize for a few quarters and probably start coming down. So I think it is stabilized. I don't think we see any more borrowing costs going up. But we always, as a policy, if the borrowing cost comes down or if the borrowing cost goes up, a part of it we will try to maybe adjust within ourselves, maybe absorb it ourselves. But when it goes beyond that, we pass it on to the customer. The same happens when the borrowing cost comes down. We wouldn't like to keep those, when the borrowing cost is low, we wouldn't like to keep that extra margin with us. We would rather pass it on to the customer and reduce our yield. But what our point is, always we would like to maintain our NIMs and the spread almost constantly.
Lastly, sir, before we let you go, sorry to circle back again on this topic, but given the fact that Muthoot Gold branches are very close or very closely situated compared to IIFL branches as well, what we understand is that a lot of customer as well as employee attrition had happened in IIFL Finance, and these customers and employees had shifted to Muthoot Finance. So, are you expecting your attrition rates to go up or customer attrition rates to go up going forward? Any clue on that if you could give us?
Okay, the competition being near us, Muthoot, it is not IIFL, it is all the other, the banks, the Manappuram, the Muthoot Fincorp, the Muthoot, other Muthoots, everybody is right around Muthoot only. So that is not going to affect us. Then you're talking about the attrition. Muthoot as a policy does not take any people from any other competitor. We don't need to take anybody from any other competitor. The same goes with IIFL also. We have not taken one person from IIFL. We don't take such people because when we feel somebody is coming from another NBFC, he comes with a, I don't know. We as a policy, we don't take people from. We take our own people. We groom them. They progress in the company. They take up higher responsible position. That is what Muthoot's policy is. So to answer your question, we have not taken even one person from IIFL.
That's good to hear. So clearly very confident of the growth internally at Really Muthoot and not looking outside in terms of what the competition is doing. And thank you so much, sir, for joining us and talking to us about that. And also looking at perhaps revising the guidance upward when it comes to AUM at the end of the quarter 2. We'll talk to you once those numbers are out as well. But